next week. So be prepared to answer that question. One of the other options that they may present to you after doing this budget and having that conversation is a short sale, refinance, forbearance, reinstatement, deed in lieu. So let's talk a little bit about our other options. Refinancing. Now that's one of the easiest ways to avoid foreclosure. Of course, it's very difficult nowadays with equity being negative in a lot of situations and incomes down. So that may be an option. If you do have an FHA mortgage, then FHA has a streamlined program where you can go over the mortgage owed, or you could, in other words, you could have negative equity and still qualify. FHA's got a streamlined process. They don't order appraisals. They don't check your income and credit and those things. You just have to be employed. So refinancing is an option for FHA loan holders. And our next option would be a forbearance or repayment. And this is simply where if you have the means to get caught up on what is owed, that can be spread out over the next 12 months, 36 months, 60 months. It just depends on what the lender is willing to do. Well, once again, this is a function of going through your budget before you make that phone call. And your lender may offer you a forbearance or repayment. And what they will do is they will spread out what you owe or what you are past due now over a 12-month period and add it to your current mortgage payment. So your payment will go up for a 12-month, 36-month, 48-month, 60-month period, but you can get caught up. And that's another good option right now. Another option that they may present to you is what they call a reinstatement. And this is not this is not one of the most popular options right now because it does require you to bring what you owe plus legal fees, processing fees, and simply get caught up. And the next slide that we've got here is an example of the reinstatement. And if you'll see this, in this example, our homeowner is behind 4 payments, and they simply get caught up. That may not be the best option for everyone because obviously cash is tight at this time. But once again, don't ignore the situation. Do your budget and see what you're dealing with before you contact your lender. And there is that free session next Thursday. If you gather everything ahead of time, think about your hardship. Just use your resources, and best of luck to you. I'm going to turn it back over to Suzy now. She's going to continue on.
Thank you, Damien. Another option a homeowner might have is bankruptcy. A bankruptcy may stop a foreclosure and allow a homeowner to reorganize their debt and keep their property. If you are not able to make your payments after bankruptcy, your house still might foreclose. But I would always advise you to speak to a bankruptcy attorney to discuss your specific situation. But what I have found also is that a homeowner will also need to have mounting credit card debt, installment debt, and other loans other than just a mortgage payment that they are not able to make. Again, this will only stall a foreclosure. It will not eliminate the mortgage. The deed in lieu of foreclosure. This one is often referred to as a friendly foreclosure. It's when the homeowner signs the deed over to the bank rather than going through the foreclosure process. It typically only works with one mortgage, and it's still reported as a foreclosure on the credit report. This one is not a forced sale and would require a hardship package as well, as Damien was explaining, a hardship letter, financial documents, etc. They'll also investigate the property itself to see if they will take the keys for your property and let you move on with your life. The last option that we have is a short sale. And the short sale is basically when the lender accepts less than what is owed on the property. And this relieves the homeowner of the debt. And lenders are willing to accept a short sale because it just greatly reduces the expense and the time that's involved in foreclosure proceedings. There are tax implications that may be involved, and I'd advise you to speak to your accountant or attorney regarding those. But it's less damaging on your credit than a foreclosure. You're able to generally acquire a new mortgage in 2 years compared to a foreclosure, which could be 5 or 7 years. To give you an example, I had a friend that gave me a call a couple of months ago, had lost his job, started depleting his savings to make his mortgage payments. He had 2 rental properties and a primary residence, and he lost his rental in one of the properties. I sat down with him and we looked at these options, and the first option was to sell the property. Well, he did not have enough equity in the property to sell it, so this was not going to be an option for him. And we looked at the possibility of renting the property out. His mortgage payment was so great, along with the condominium association dues and property taxes, that he would not recover enough rents to make his mortgage payment monthly. He explored the option of a mortgage modification. Contacting his bank and opening the lines of communication just actually caused him a great deal of frustration and wasn't able to successfully complete a mortgage modification and was ready to give up. Refinance for him also was not an option, as he did not have employment and his savings were being depleted, which would also go in line with forbearance and reinstatement. He had no savings to reinstate his loan. He then went to go speak to a bankruptcy attorney who advised him that outside of these 3 debts that he had with his home mortgages, he was good. He did not have any credit card debt. He didn't have any outstanding loans. He owned his car free and clear. So bankruptcy was not the best option for him and was advised to seek a short sale. So I sat down with him and we looked over his financials, tax returns, bank statements, and pay stubs. Being a certified distressed property expert has allowed me to better educate a homeowner on what is entailed for a successful short sale. We went over all of the expectations. I marketed his property for sale and successfully found a buyer to buy his property. Just 2 weeks ago, we got an offer on the property. I had his short sale package completed already. I assembled it myself. I did not have a third party involved, and I submitted it to the bank. I negotiated successfully, and we will be closing on his condominium next Wednesday. This situation, like many others, if you decided to have a short sale your property, I would advise you to work with somebody who is experienced and who is a certified distressed property expert. And actually here at Davidson Realty, we have, I believe, over 25 agents that have this certification that can help homeowners in discussing their options. And if short sale is the option for you, to successfully submit, negotiate, and close a short sale for their property. I think that we've covered all of our options here today, and I'd like to open up the lines if you have any questions about any of the options that we have. Here's something I actually forgot to mention that is very valuable for our service members. If you have a loan and you are an active military person, the government has a special division that can help you as a homeowner if you are facing foreclosure. You must show that you are in active duty as you're going through these foreclosure proceedings, and there are ways that the government can help circumvent foreclosure and assist you with your ability to pay your mortgage.
Well, that concludes our actual presentation, but we invite you to type in any questions you have in the box on your screen. We'll be answering questions as long as we have some coming in until our time would be up. The first question we have is a question saying, I have heard that short sales take too long. Is that true? Suzy, would you like to answer that question?
Yes, I would. In my latest example, I did get an approval from the bank in 7 days, and that's due to the fact that I had everything organized and ready to go, and I had a lender who was receptive to receiving my short sale package. However, on the other hand, I do have another short sale package that I have submitted in with Bank of America, and we're working on it for 2 months. So there are some varying degrees with a short sale, but again, working with somebody who is knowledgeable of short sale packages and how to submit them successfully is key.
Okay, we have another question that just came in. How long can I stay in my property? Suzy, would you like to take that one?
I would suggest that you stay in your property for as long as you can to maintain the home. Banks would like to see that things are maintained properly. You can stay up in your home until the actual day of foreclosure. There's no need to really move out of your property. Stay in your home, keep it up.
Okay.
Damien, did you want to elaborate on that?
Yes. As long as you're in your home, you should continue all options. Even if you tried a modification or refinance or short sell and it didn't work, banks change their guidelines daily, weekly, all the time. So they may not accept your offer for short sale or modification this week, and then next month they realize that they do have to accommodate a lot more customers, and they change policy all the time. So keep fighting. Just don't give up and don't put your head in the sand, and just keep fighting.
Okay, we have another question. Should I stop paying my mortgage payment? Damien, would you like to take that question?
Yeah, the answer is no. Do what you can for as long as you can. Just because you're negotiating a short sell or modification does not mean that you should not stop making your mortgage payments. So the answer is no. Keep paying your mortgage payment if possible.
Okay, another question we've received. Do I need to be behind on my payments to qualify for any of these options?
The answer is no. You don't need to be behind. Once again, if we're talking about loan modifications, the ideal situation is that you break even with a modification, or you have a positive cash flow of between $100 and $500 as a result of the modification. So trim your budgets down as much as you can, cut expenses as much as you can, but you don't have to be behind. If you know that you are going to be struggling over the next months or years, go ahead and start the negotiating now.
Okay, we have one more question, and it's somewhat like your last answer, but if I have $100 left after I've prepared my budget with the modified payment, do I qualify for a modification?
Generally speaking, you want to be break even with a little bit of cash flow. $100 to $500 is, and it's a general rule of thumb. Lenders change their guidelines all the time, but it's going to be up to each individual lender to decide. So yes, that's an ideal target right there. Is break even, $100 a month, $500 positive cash flow. Something in that ballpark is ideal for getting your modification.
Okay, we don't have any other questions at this time, so I would like to thank everyone for joining us. We do have another webinar next Thursday at 10 o'clock to focus specifically on short sales. We will have Dottie Lay with us, who is also a certified distressed property expert here at Davidson Realty, and we will have Cindy Vaughn, who is a staff person here that handles all the relationships with the lenders and negotiates the short sales for many of our agents here. As you see, your screen right now has our pictures, myself, Sherry Davidson, Suzy Evans, and Damien Blumstein. We have the email addresses there, our contact information, so feel free to contact us with any questions you might have that you didn't get addressed during the webinar. And again, Davidson Realty is in St. Augustine, Florida, and we serve the Jacksonville, St. Augustine area. So if we can help you in any way, please let us know, and thanks again for joining us today.